Hello there, and welcome to Finance Focus with Andrew, a platform where we engage in conversations that endeavor to enhance our financial literacy. Welcome aboard to quite another engaging session. And as you can see on my screen, with me, I have the prospectus for the Treasury of October 2025. So that is what I have on my screen. That is the treasury bonds that have been floated for the month of October 2025. Investing in these treasury bills, treasury bonds, sorry, there are quite some information that you need to have, and it is very important that you get to be with me and get to understand anything and everything that you need to understand about 2025. So I welcome you aboard to this session so that we get to learn together. In case you have any questions as we move along, ensure that you drop them in the comment section so that I can be able to to answer them. Because if I don't respond to the questions that you might have, as to why I created this platform and this particular session. So allow me to dive into what we are to discuss for this session. The two treasury bonds that are floated. In case you are coming across the word treasury bonds for the first time, and I hope you are not, just understand that treasury bonds is a loan advanced to the members of the public, advanced to the government by the members of the public. So it is a loan advanced by the government to the members of the public, and members of the public get to benefit because they get some interest in return. So that is how it comes to be an investment, because these guys get to get uh, these guys get interest in return. So that is why it becomes an investment, because there is something that the investors will take home in return. Now, there are two specific treasury bonds that we are going to discuss in this particular session, and they are the treasury bonds that are currently on offer. The treasury bonds are sold through the Central Bank of Kenya. So uh, it is, you know, that the Central Bank of Kenya is the bank to the government. So they act on behalf of the government and sell the treasury bonds on behalf of the government. And it is very important for you to understand anything that you get to invest in. So it is very important you get to listen. In case you have ever wanted to invest in treasury bonds, first stick, get to learn everything that you need to know, understand all the features, so that you don't get yourself into something that you don't understand. So I'm going to go through all the features on these two bonds, and tell you everything that you need to know, so that in case you want to put your money in these two treasury bonds, you'll have the information that is required. Now, let's start with the first bond, the bond on the left side. That is the FXD1 stroke 2018 stroke 015. That is the title of the bond. Every bond has a very unique name. It is just an identification, just the way you have a name, but there are important information that you can get to derive from that title. There are three things that you can learn from that title itself. And number one, the FXD1 should tell you that is not an infrastructure bond. So be prepared that any amount that you get to earn from that particular bond is taxable. So it is not a tax free. I know many Kenyans keep waiting and keep asking. It is a taxable bond, and that is why it is an FXD1. Then stroke 2018 should tell you that that bond was issued in 2018. Basically, it has lasted for 7 years, and stroke 015 should tell you that the original tenor was 15 years, but that is not the case right now, simply because we are in 2025 it means that around 7 years has elapsed. And that is why the next line reads that the tenor of that particular bond is 15, but in bracket, it is 7.5 years, because the bond was issued in 2018. Right now, we are in 2025. It means 7 years and some months have elapsed. So that is why the bond has 7.5 years to maturity. So we are talking about an investment that will last the next 7.7 years. So it is very important to understand the time to maturity of a bond, because it tells you, it gives you a horizon of the kind of investment that you are about to dive in. Don't take your short-term funds, don't take your emergency fund and put into this bond, because it is a bond that will last for the next 7.7 years. So it is very important to get about the time to maturity of a bond. Let's go to the next important thing. That is the coupon rate. So the coupon rate of this particular bond is at 12.65%. Is it a good deal? I don't know whether for you it is a good deal, but considering the current environment that we are operating in, we are in an environment of very low interest rates. So the current rates of government securities can clearly be indicated by the treasury bills. And the rate for the treasury bills, if you checked last week auction, it is something between 7.9% for the 91 days and 9.5% for the 364 days. So we are operating in an era where government securities are giving an interest of between 7.9% and 9.5%. So for me, 12.65%, it's still a good deal. It might not be that attractive, but it's still a good deal. Maybe it is one of the best interest rates you can get currently when it comes to passive income. The maturity date of that particular bond is on the 9th of May 2033. So I know 2033 sounds too far because we are talking about an investment. But if you are talking about a mortgage, maybe 2033 would sound like next year. But now that it is an investment, I know it sounds too far to you, but be sure it is not that far. It is just 7.7 years away. Allow me to go to the second bond, because you can see the other features down there are shared for the two bonds, so we can discuss them together. So I go back to the other bond, that is the FXD1 stroke 2021 stroke 020. The same case. It means that this bond is not an infrastructure bond, it is a taxable bond. And any interest that you get to earn from this particular bond is subject to withholding tax. Now, stroke 2021 means that this paper was originally issued in 2021, and stroke 20 means that the original tenor of this particular bond was 20 years. But you can see that the current tenor or time to maturity is 15.9 years, simply because the paper was issued in 2021. So we are now on the second bond, that is the FXD1 stroke 2021 stroke 020. So the paper was issued in 2021 and the original tenor was 20 years. But you can see the remaining time to maturity is now 15.9 years, simply because from 2021 to 2025, around 4 years have elapsed. So 20 years, if you subtract 4 and some months, that is where the 15.9 is coming from. You can see that the rate is a bit high. That is the coupon rate is a bit higher. It is at 13.444%. As I had explained on the other bond, if 12.65 I explained is a good deal given the environment that we are operating in, of course, even 13.44% is still a good deal. Maybe the only disadvantage with this particular bond is the time to maturity, You can see it is double the other bond. It is quite wrong. It might not sound too good to many people. The withholding tax for the two bonds is at 10%. It means that the interest that you get to gain, 10% of that will go with the government, whether you like it or not. So if you are not willing to pay any tax to the government, don't try invest in treasury bonds. Now, maturity date for that particular bond is the 22nd of July 2041. Again, 2041 sounds too far, but it all depends with your view. I'm not sure. I'm not sure how far it is. I'm not sure how far it is from here, but it's all in the mind, because I'm sure if you are being told about a loan that you'll finish paying in 2041, you will say that it is not too long. But now, because we are talking about an investment that might take up to 2041, I'm sure it sounds too far. So let me not say much about that. Now, let's talk about the period of sale. You can see that the period of sale is between 26th of September 2025 to the 15th of October 2025. So, to explain this period of sale in a layman's language, I will use your favorite artist or musician. Bring them at your mind. If they want to do an event in December, they don't announce the event to you on the same day, but they give themselves time to sell their tickets, maybe a month or two. That is the same case with the Central Bank of Kenya. When they issue some treasury bonds, definitely they need to give investors time uh, to see the features of the bond that they have offered, analyze them, and then get to make their decision. So that is why we have that period that is about, I would say, 3 weeks for you to get the features of the bond, get to understand them, and make a decision whether to invest or not. That is simply the period of sale. It is the time that you have to get this information, get to think about it, and make a decision whether to invest or not. The other thing that is quite important there is the submission deadline. You can see that it is on the 15th of October 2025 by 10 a.m. So if you have the thoughts, or you have made a decision of investing on either of the two bonds, by 10 a.m. 15th of October, you ought to have submitted your bid. Now, the other thing, their auction date. So it is the auction that will determine whether your bid will be successful or not, and the auction will be held on the same day the bidding closes. That is on the 15th of October 2025. There are so many dates that are stated there, and we are analyzing each and every of them and what each date means. Can see we have another thing that we are calling settlement date. That is the 21st of October 2025. Now, there are some series of activities that take place between the bids being closed and the settlement date. You can see the bids will be closed on 15th, but the settlement date is on the 21st of October 2025. This is the reason behind that. Now, once you bid, you don't automatically become a bond holder. So it is after the bidding, the auction will be done, and it will be determined whether your bid was successful or not. Now, if it was successful, you'll be sent something that we call the payment key, a code, just like the M-Pesa transaction code, that you will need to use when transferring money from your commercial bank to the Central Bank of Kenya. So don't try don't try to make the mistake of sending money to the Central Bank of Kenya without uh, without uh, without using that payment key. Now, someone is asking a question. Please, can you explain if you want bank bank do a bid for you? How does that work? Now, there's something that you need to understand. Your name is so difficult, so forgive me. I think Metquency. I hope I read it correctly. Now, responding to your question before we move on, they're asking, please can you explain if you want the bank to do a bid for you, how does that work? Now, you need to understand that there are two types of markets when it comes to treasury bonds. What we are discussing here is in the primary market, is what we call the primary market. We are buying directly from the Central Bank of Kenya. Number two, there is a secondary market. You see, the Central Bank of Kenya opens or floats treasury bonds tuseme monthly. That is the trade that has been there for the whole of this year. Every bond we have, every year, every month, we have some bonds that have been floated. But you need to understand that bonds are traded on a daily basis in the Nairobi Securities Exchange. And that is what we call the secondary market. So when you are buying bonds from Nairobi Securities Exchange, you are doing it from the secondary market. And that is where your bank can come in. If you don't want to go to the primary market direct, you can use your bank. They buy you bonds in the secondary market. But for these particular two bonds, within these days, we are talking about between the 26th of September 2025 to the 15th of October 2025, your bank cannot assist you. This is the primary market. In fact, you can see some line down there. I hope my image does not lose the clarity. You can see down here there is something they are talking about secondary trading. We would have come to that, but let's talk about it. Secondary trading in multiples of 50,000 commences on Tuesday, October 21st, 2025 for the two bonds. So what it means is that right now you cannot buy these bonds through a bank in the secondary market, but you can do that after the 21st of October 2025. But for now, if you need to access these two bonds, you don't have option other than going through the primary market. But let me ask an interesting question. The process of buying treasury bonds and treasury bills nowadays is so simplified. You can do everything on your phone. It is a very simple process. Nothing is complicated. So I don't understand why in 2025 you want your bank to do the bidding for you, and definitely your bank is not a charity organization. They'll charge you a commission. So maybe you have your own reasons for you to want the bank to do the bidding for you, but doing it yourself is very simple. There is nothing that is complicated. You can do it on your own. But if you choose to go with the option of the bank, you can do that. But remember, they are in business, so you will be charged a commission that was unnecessary, a commission that you'd have avoided. Now, let's go back to the discussion. I hope my question was answered correctly. Now I get the reason. If you are not in the country, then I get the trick where comes in, because it will not be possible for you to pay for the to do. If you do it through your bank, they will not require you to be there physically. Then you can try the option of going through your bank, because it might be easier, because I believe the settlement account for your bank still lies in that same bank. So maybe they might be able to do the transfer within the bank. So for that particular reason, you can go through the bank option. But for this particular two bonds, you have to wait until the 21st after the primary market has done its business. That's when the doors are opened for the secondary market. And remember, in the secondary market, it will totally depend on the availability of a willing seller of this particular bond. But anyway, you can consult your bank. Maybe there are even other bonds that are currently available in the market that are way better than this. So engage your bank, and I believe they can advise you more and even more options that are available in the market. We were on the settlement date. Now, the settlement date is now the day you get to be engaged with the Central Bank of Kenya. It is the day now you can call yourself a board holder. It is the day that you can even go and post to your status and say that you are the newest bond holder in town. But it means that by this date, you ought to have sent your money to the Central Bank of Kenya. So that is the day that you get to seal the deal with the Central Bank of Kenya about you investing in Treasury bond. Now, the amount that is required for these two bonds is 50 billion for each, and the trade has been Kenyans are getting crazy. They are offering way more than the government want. You might see these bids. These things are receiving bids worth 200 billion and even over that. The purpose for the bonds, of course, we are a country that tries to bite more than we can chew. Budgetary support. We read a budget that we could not finance fully through the revenue that we collect. So that is the same thing we are trying to support. So the purpose is for budgetary support. You can see it in a few minutes, but get that the minimum amount you need for you to bid competitively, no amount should be a multiple of 50,000 bidding and uncompetitive bidding very soon. For now, allow me to discuss some few points down there that are quite important, but sometimes we might tend to ignore them. So give me time to scroll down a bit. I think it's clear on both platforms. By the way, if you're coming across this channel for the first time, get to be seeing more of this. If this is the kind of content that you would like to enjoy, the name of the containing financial content every other day. Now, let's go to the point of payments, because this is another area that people make mistakes when making payments for the treasury bonds. They said that all successful bidders should obtain the payment key and amount payable from the Central Bank of Kenya DhowCSD investor portal or app under the transaction tab on Friday, October 17th, 2025 for FXD1 stroke 2018 stroke 015 and FXD1 stroke 2021 stroke 20. Now, it is important that you note that they have mentioned of DhowCSD. So DhowCSD is the platform where all this is done. I had mentioned that nothing is done manually nowadays. You only need to download the app. It is available on Play Store, and I hope on all the other stores that are available on the phone that you are using. So just get to download the app, and even if you are not able to access the app, you can just log in direct into the portal on your favorite browser. Sorry for that. So you can just access the portal on your favorite browser. Just type DhowCSD portal, login. That is where you get to open an account. That is where you get to create bids. That is where you be able to track the stages of your bids. Everything will be done on that particular portal. And in case you are not sure of how all this is done, just go to YouTube, Finance Focus with Andrew. I have done a video on how to open an account on DhowCSD. I have done an account a video on how to buy on how to buy on how to open an account, how to place bids, everything. Now, Frida, I can see your question and your comment too. Uh, I don't think I am focusing so much on me being seen. Most important is to display whatever that I'm reading. So as far as you can see whatever I'm reading, that is what matters most. But I have also done this explanation for the same boards uh, in during the day, so you can check the explanation on the same channel. In case you want to see me clearly. But anyway, on a light note, now, Frida, you have also asked a question. Process of buying the bonds. Now, the process is very simple. I have said that it is totally digitized. The first thing is that you need to have a CSD account, and you can open one through the DhowCSD platform or the DhowCSD, either the portal or the app. The process is quite simple. You only need to have your ID, a photo of your ID, a copy of your KRA pin, and a passport photo of yourself. That is all that you need to open the DhowCSD portal. It is a very simple process that you submit your documents to the Central Bank of Kenya, and within a very short time, maybe a day, your account will be ready. From that, you only need to do a bidding. Once your bid is successful, you send your money to the Central Bank of Kenya, and that is it. You will be able to pay for the bond, and you'll now be a bond holder. That is just a highlight, but I have done a lot of videos explaining all these things in details. Frida, you can just visit the channel Finance Focus with Andrew. There is a whole playlist on videos about treasury bonds. But in case there is a very specific question that you want to know about the process, just type it there. I will get to respond as we move on. Now, let's go on. And you can see that the Central Bank of Kenya reserves the right to accept application in full or in part, therefore, or reject them in total without giving any reason. So the Central Bank of Kenya can accept your bid or can reject it, and there is nothing you can do about it, and they don't owe you any explanation. Secondary trading, we had mentioned about it. So this is the primary market we are talking about, but gets to understand that bonds are traded every day in the Nairobi Securities Exchange. You can see these bonds will start trading again in the Nairobi Securities Exchange after the primary market is done with its work. That is on the 21st of October 2025. So if you want to go through the secondary market, you can do that after after the 21st of October 2025. There's a very important point there that you need to understand. Remember, when we started, I said the bond is going for 7.5 years. It's important to note that it is not cast on stone, that you must hold that bond for the 7.5 years. But what is the price of rediscounting? And rediscounting simply means getting your money back before maturity date. So the Central Bank of Kenya will rediscount bonds as a last resort at 3% above the prevailing market yield or coupon rate, whichever is higher, upon receiving written instructions from investors via the email rediscounts at centralbankofkenya.go.ke. Uh, now, I'm coming to your question, Sweet Rose. Just hold on there. I'll be answering your question in a few, for me not to lose my trail of thoughts. Now, when you want to sell your bond before the 7.5 years are over, you have two options. And the option number one is going to the secondary market. Secondary market means that you'll need an agent. either your bank or these investment banks that are regulated. You open an account with them and tell them to find a buyer for your bond. If that does not work, you can now go to the Central Bank of Kenya. Ukikosa otherwise kabisa, they are telling you they will rediscount it at 3% above the prevailing market yield. Have that 3% at the back of your mind. I will mention to it why it might be dangerous for you to Bank of Kenya. You might end up making losses. So hold that 3% at the back of your mind. And in case I get to forget, remind me when we go to the next page about the 3% and why it might be dangerous to rediscount your bond before maturity. Will the interest rate be the same in the secondary market? As we rose the interest, the coupon rate for the treasury bond will not change. The coupon rate is constant, regardless of where you are buying it. The interest rate will remain either 12.65 or 13.44%. But what might be a bit different is the price at which you buy the bond at. The difference might come in terms of price at which you buy the bond at. I know that creates another question of pricing, and I'll be answering it very soon because I want us to go to that part of pricing, and we get to. I hope my presentation have moved to the other page. Let me just a moment. I ensure that platforms. I'm trying to do a balance between TikTok and YouTube, and we need to be on the same page on the two platforms. Now, I hope you are on for the two platforms. Now, when the boards are reopened, they come with these pricing tables, and what you see on these tables, you can see one side we have the yield, or yields because there are many probable yields, and we also have something we call the clean price. Now, if this was a new bond, there would have nothing like pricing. There wouldn't have nothing like these tables that we are seeing here. They would not exist because a new bond will always be sold at par. That is, one unit will go at 100 shillings. But when it comes to reopened bonds, the case is that is below 100, and it might be sold at a premium, that is a price above 100. This price is affected by the yield or the current interest rate or the current market yield. And you can see every probable market yield has a probable clean price. So you can see, for example, when it is at 12%, you can see the price is 103.1525. When it is at 12.1250, the price is at 102.5309. So you can see as the yield goes down, so the two has an inverse relationship. As the yield goes up, the clean price goes down, and that is where we come to competitive bidding and uncompetitive bidding. So if I'm bidding non-competitively, I'll only quote the amount that I want to invest. But if I'm investing competitively, I hope I did not mix myself there. If I'm bidding non-competitively, I'll only quote the amount that I want to invest. But if I'm bidding competitively, I have the option of giving the amount, that is quoting the amount, and the amount has to be an amount above 2 million or 2 million going up, and I quote the yield that I want. Like I'll tell the Central Bank of Kenya, I want to invest 3 million and I'm demanding a yield of 13.5%. You can see when the yield is 13.5%, that is on the first bond, a yield of 13% translates to a clean price of 98.3183. It means that for every unit of the bond, I'll not pay prices that the person who bidded non-competitively will pay, but I'll pay a lower price of 13.5%. It is at around 96.0166%. But nowadays, the danger with that is coming with bidding competitively, the Central Bank of Kenya is out here looking for cheap credit. So they are rejecting competitive bids without any mercy. So if you check the two auctions that has happened, that is in the month of September and August, they reject almost all the competitive bids. So if you really want to invest that money, even if you have the muscles, even if you have the amounts that gives you an allowance to bid competitively, you might be forced to bid non-competitively, because once an average is determined by the auction, the sad part is that right now, when the auction is open, we cannot know what will be the market average or the market yield, the market average yield. So we cannot know the price of these particular bonds at this time. The price will always be known after the auction is closed. Now, you can see on the table, it reads screen price. Screen price of the bonds will be determined. Let's now go to the dirty price. Now, the dirty price of the bonds, the dirty price is the summation of the clean price and something that we call the accrued interest. The accrued interest of the bond. We have seen how the clean price will be determined. It will be determined by the market average yield of the auction. The accrued interest is what I want to explain now. Now, the first bond, that is the FXD1 stroke 2018 stroke 015, will be paying coupons in the month of why am I forgetting? They'll be paying coupons in the month of November and May. Right now, we are in October. And if you buy this particular bond right now in October, you will still receive coupons in the month of November. And the last coupon for this bond was paid in the month of May, but you'll buy it in the month of October and receive coupons in the month of November. So you get to realize that you'll be paid coupons worth 6 months, but you will only be holding this bond for just a single month. So there's some interest that you receive that does not belong to you. I hope it makes sense. You are buying this bond in October. This bond last paid coupon in the month of May, and you'll receive the coupon in November. That is the coupon for the months between May and November, 6 months. But this bond only belonged to you in the month of October and part of November. So there is some interest that you receive there for around 5 months that does not belong to you. So that is what we call the accrued interest. Because you receive that interest and it does not belong to you, you have to pay for it as you buy the bond. So nothing is free in this country. So you will receive interest that does not belong to you. So what you do is that you pay for it as you buy the bond. I hope we are clear on that. And that is why down there you can see the accrued interest for interest is of 5.3519 per 100. Like it has a very big accrued interest, because you'll be receiving interest that does not belong to you for almost 5 months. And you can see down there, example, if the quoted yield is 12.65%, the dirty price is the clean price, which will be 99.9746, plus the accrued interest of 5 shillings. Breathing does this 105.3265 means. If you bid to invest 100 Kenya, but rather you will pay 105,326. I hope we are clear as far as the pricing of reopened bonds is concerned. Now, I want us to go to the very last part that we need to talk about in this session before we wrap up, to bring the presentation up on the other end. In case you are coming across this platform for the first time, this is Finance Focus with Andrew, and we engage in conversation that endeavor to enhance our financial literacy. So follow if you are watching this on TikTok, and subscribe if you are watching this on YouTube, so that you can get notifications anytime you get to post. I'm trying to bring on my presentation on the other side. I hope it's very clear. Now, you can see the FXD1 stroke 2018 stroke 015 pays coupons in the months of October and in the months of November and May. And it is important to note that the dates are predetermined. The dates are already set. The particular dates when the coupons will be paid are already predetermined. The payment of the coupons will not depend with how the CBK governor will be feeling in these months. The payment of coupons does not depend on how the CS Treasury will be feeling on these particular months, but the dates are already predetermined, so you can even be able to to, to plan your cash flows even before you receive them, because you know the very particular day that you expect to get your coupons, the month, the date. It's just the time that you are not aware, that is not indicated there. The other bond pays coupons in the month of February and August. The dates are also predetermined, so you can be very sure when to expect your coupons. It is not about guesswork, but there are dates that are already predetermined, so you can be able to plan your cash flows very effectively with this kind of information. Up to that point, I hope I have mentioned, if not everything, majority of the things that you need to know about the October Treasury bonds auction, unless someone has a question on the same. I really think I have shared quite a lot of information that is important when making a decision to invest in these particular bonds or not, the kind of information that you need. But in case anyone from the two platforms has a question on the two bonds or treasury bonds in general, can drop it in the comment section so that we can address it before I get to end this session. Uh, Even if it is not a question, you can also drop a compliment, especially this one person who has been consistent on the session on TikTok since I started. Others are coming and moving, but you have been very consistent. So, have you gained anything from the session, or we are just wasting your time? I would appreciate to get to hear some feedback. I think you have been with me from the start to the end, so I expect if you have not gained anything, this session was not important to anyone. So even if you don't have a question, you can share some feedback that maybe can make the next presentation even more better. In the meantime, anyone with a question about these two treasury bonds in specific, or any other treasury bonds or the process that is engaged, feel free to drop that question in the comment section, and we get to answer and get to learn together. So anyone with any question? Is none. Just request that you might consider subscribing to the channel. Thank you, Sweet Rose. I think you have been consistent all through. I'm sure you have learned something. If you want to understand more about that, this is the kind of content that I post on a daily basis on YouTube. So just go and search Finance Focus with Andrew, as it is just on TikTok. I have so many videos on YouTube. May it be about treasury bills, may it be about treasury bonds, may it be about money market funds, may it be about special funds, may it be about that have been a lot of things have been discussed on that channel. So consider going to YouTube and search for the channel, subscribe and get to learn more. And everyone else, if you are coming across this channel for the first time, consider subscribing if you want to learn some of the it out. And even if you think that you don't have to work on your personal finance, I can promise you that you are just lying to yourself. You really need to start working on it as soon as yesterday. So that is it for this session. I hope to engage with you on matters of these bonds and other bonds that will be floated, and more learning about avenues. So thank you for giving me your time. I hope you got to learn. So maybe I would say that we meet in other engagements or in other session. And until then, stay financially woke. Thank you.